Alright, ladies and gentlemen, can you give a big round of applause for that fantastic video? Thank you. And of course, once again, a very warm welcome to EPIC 2014, in short for Expo for Property Investing and Crowdfunding. So this is in fact the first property investing and crowdfunding expo that is happening in Asia. So are you excited to be here, ladies and gentlemen? Let me try one more time. Are you excited to be here? Thank you, very good. This is the energy that we want from you today. Lower the volume, I'm talking too loud, is it? AV, sorry, I can't really control the volume. Okay, anyway, we are going to start the event very soon, but before we start this event, just a few things that I want to share with all of you here today. We have four main things that is happening today, all right, at this event. The first and the most important part of today's program is that we will be having a couple of speakers coming up on stage to share their insights with you on educating some of the pointers to all of you here on a little bit about property investing and crowdfunding. That is the first thing that is happening here today. So at the end of the day, we hope that every one of you here will walk away with a little bit of knowledge, and of course, we have people that, of course, friends that have come to Singapore from all over the world. And of course, our main concern here today is that we can walk away with a little bit of knowledge in this investment. And also, the most important thing is we can earn a little bit more money. Yes, that's right. So the number two thing that is happening is we will be having a few refreshments, tea breaks and lunch, and all these are entirely free flow and free of charge. And of course, the third thing that is happening is our networking session. We'll be having a networking session later on at 4 p.m. And of course, end of the day, when we end off this event, we will be having the happy hour, drinks and all this kind of thing for everyone to do some networking and all this sort of thing, okay? So ladies and gentlemen, we will be kick-starting this event. We are honored to have Dr. Jeffrey Chi, the chairman of Singapore's Venture Capitalist and Private Equity Association, to present the first keynote speech. So ladies and gentlemen, can you put your hands together and welcome Dr. Jeffrey Chi, please. Thank you.
Well, first of all, congratulations to the team at Co-Assets. It's a very exciting crowd we see here today. And thank you for having me to speak here to this crowd. I come from a slightly different world. I come from the world of venture capital. We do see quite a bit of crowdfunding, not quite in real estate. So I thought, given that you're going to get 2 days of real estate discussions, that I would start things off slightly differently and tell you some of my perspectives from crowdfunding from the venture capital side of the world. I currently run a venture firm called Vickers Venture Partners. We're a Pan-Asian fund. I also currently sit as the chairman for the Singapore Venture Capital and Private Equity Association. So this is an unusual slide. And for those of you who've done some research on crowdfunding, you probably know why it's here. But if you go back into the history of crowdfunding, you will actually find out that while the Statue of Liberty was a gift from the people of France to the people of America, the pedestal, pointer here, the pedestal at the bottom was actually crowdfunded. In 1886, they were short of funds to build this pedestal because the agreement with France was really to that the American would build a pedestal for the Statue of Liberty. But in 1886, they realized that they were short of funds, and a famous person by the name of Pulitzer, of the Pulitzer Prize, owned a newspaper, and he decided to basically use his newspaper and crowdfund. So he managed to raise $300,000, which was worth a lot more than it is today, to build that pedestal. Spicy Horse is one of my portfolio companies. They operate in mobile games. And they were testing a few projects. And so they weren't sure whether or not to really spend the capital to deploy capital into launching new games, new efforts. And so what they did was, last year, basically decided to launch a few Kickstarter campaigns. So Akinero was an online game that they decided to test the market with. They developed some trailers. They put it on Kickstarter to see if there would be impact, right? And so there was. And so they managed to raise about $200,000 to get it started. But that gave them the confidence. So even though $200,000 wasn't enough for them to develop the full game, it gave them enough confidence that this is something that is worth doing. Likewise, they have rights to some IP content, and they're wondering whether or not to develop animation around that. And so they raised, again, a few $100,000 just to launch that. So you see that through crowdfunding, companies are now able to get very quick feedback from the market on specific products that they have. The third one that you see was Oz Action and Adventure, and that was an effort that they decided to cancel because it wasn't getting much traction. They didn't go through with a full campaign. When they saw that there wasn't sufficient traction, they decided to cancel the funding. Just 2 weeks ago, I spent some time with this company called Connected Device. Connected Device basically is trying to tackle the space on smartwatches. And they thought that they had a product idea, they wanted to launch it, and rather than raise the capital to build the prototypes and all that, they went by a Kickstarter. So they launched a Kickstarter campaign, they raised 300,000, trying to raise 300,000. No, they didn't. They did raise 300,000, which was, they were trying to raise 150,000. So they got more than they actually bargained for. They also had quite a bit of traction. So because of the Kickstarter campaign, they had, in a way, pre-sold some watches before, the 2,500 watches before they even had a product. So customers were sufficiently interested to get this device. And since then they've sold 130,000 units of this watch, another 100 plus thousand of a second brand. So yet another successful story. A few months ago, I was looking for a particular brand, and they only do online sales. They have a store somewhere in San Francisco. But what caught my attention was really that if you look at this page and look at the URL across the top, the products here, they don't actually sell yet. They're crowdfunding, and what they're telling customers is, we're thinking about producing this product. If enough of you order it, we'll produce it, right? So again, you don't need to launch a product. You can have an idea that's out there. You can test the market a little bit, potentially even pre-sale, before you actually go out and spend money and build up your inventory before you launch a product. So crowdfunding, in a way, is changing the way we do business. And these are just some of the more famous crowdfunding projects and products that have launched. The most famous one is the one right at the top, Pebble Watch. This was the watch that used the iPod Nano. Is it Nano? Yeah, the iPod Nano. Sorry, there's too many products these days. And they just built a band around the. Actually, no. Pebble Watch was basically a smartwatch that launched. So that, up until a few months ago, was the record in terms of the most amount raised for a specific project. what I found in my research was in June this year, there's another company or another product that overtook that. So Star Citizen, which is an online game, basically raised 47 million in crowdfunding money. Star Citizen has an interesting approach as well. They are continuously crowdfunding, and they're using the crowdfunding platform to engage their customers and saying, if you want new content, if you want new versions, if you want new items, if you want new campaigns, new battles, you know, when we raise the next $5 million, we'll build it, right? So the fans are for saying, I want you guys to do that. It's kind of, and I think soon we'll start getting this for the likes of movies and TV shows. It's like, you know, I think we should have season 6 of Game of Thrones and season 7 of Game of Thrones, and we're prepared to crowdfund today. So I think that is the way that crowdfunding is changing the world. This is a big one, right? So they raised 2.4 million via Kickstarter in 2012. And they raised it, they only were trying to raise 250,000, and they raised that within 4 hours. So I think OS is doing not too bad. They raised, what was it, $1 million in an hour? But that's the type of thing that crowdfunding can do for you. Post that, what they managed to do was to raise a total of $91 million. So the extra money came from venture, who saw promise in the 3D virtual reality, call it a goggle, if you will. And early this year, they sold the company to Facebook for $2 billion. So if you think about this, had they gone the traditional route and come to venture capitalists like us, they would not have been able to raise that 250,000 within 4 hours. It would take more like 4 months. You know, September 2012 would have already brought them to December 2012. They would have lost quite a bit of time. They would have been diluted by equity. And so this is a means of fundraising for startups that is really a viable alternative. So, what is crowdfunding? It is basically taking a little bit of money from a lot of people to accumulate to what you need about a design. And I spoke a bit about these already. So there are benefits apart from just the source of funding, that you can test your new product, you can get feedback from the market, and so on. So as a result, this phenomenon that we call crowdfunding has been taking off. As of end 2012, there are over 500 platforms around the world. The growth is phenomenal. I think in 2012 we achieved 3 billion. In 2013, I think the number is more like 5 billion. So the number is continuing to increase. But what really is driving this phenomenon of crowdfunding? Remember, in 1886, Pulitzer crowdfunded for the Statue of Liberty. So the ideas have been around for a long time. So why is this thing suddenly taking off? And I think if you look at it, it is the power of media. And as media becomes faster, quicker, there are and the richness that you're able to convey to an audience, this makes it phenomenally easier and phenomenally more impactful when you start launching something like this online. So it's the rate of dissemination, it's the richness of communication, and it is changing the way we buy, it is changing the way we make investment decisions. Switching gears a little, so far what I've talked about is the category that they call reward-based crowdfunding. Reward-based crowdfunding is where the project, there's no promise of returns. There is almost an instant gratification in terms of what the donors will get out of it, right? So a lot of what Kickstarter does is to say, if you donate $5, you will get this. If you donate $10, you will get this. Ultimately, leading up to the, perhaps the product when it's finally built and so on. So the contributors are really getting products, ideas, the right to buy the product when it's first launched as a reward for that. Donation-based crowdfunding it really took off maybe a little earlier. I think basically think of it as charity, not-for-profits trying to raise money for their efforts. And so then we move on to the darker green ones, or the bluish ones, which is equity-based and lending-based. And that is the reason why we are here today. Lending-based is a little easier to tackle, and go into that in a short while, but it's been around under different nomenclature for a lot of people. The P2P lending sites, peer-to-peer lending sites, are in a way a form of lending-based funding. So this is just the growth rates for each of those, and as you see, the equity-based one is really beginning to take off. Lending has been around for a while. Reward-based really started in 2009 with Kickstarter and Indiegogo. So crowdfunding is definitely getting a lot of traction. They're increasingly so. And just to touch quickly on real estate. So as part of the investment-based crowdfunding, there are increasingly people looking at real estate. Now, real estate is a very well-known asset class. It's a very well-known investable asset class, and a lot of people have been investing it behind it for a long time. The problem with real estate investing, though, is a lot of the game isn't available for the retail investor, for consumers, because real estate deals are very large, very lumpy. The cost and the legal cost of getting something like that with ownership of the title and all that is quite involved. So it is generally out of reach for the person trying to deploy, a few $100,000 or a few tens of thousands of dollars, or even a few $1,000s, or even a few $100. But it is very attractive. It is grounded by an asset, and this was why REITs started taking off. So REITs are publicly traded. You can buy units. But if you think about REITs, the advantage of REITs is that you divide up the assets in small, biteable chunks. The disadvantages of REITs is you leave the investment decision behind a particular manager, right? And as an investor in the REIT, you have actually no say as to that property is delivering on returns. That property isn't. You leave all of that up to the manager. So there's a little bit of a lack of control. The other thing with REITs is that it's an excellent investment product if you're yield driven. That means the property is receiving income through rentals and all that. But very often with regards to development, if you're trying to get in on the development game and you see a huge upside in the returns coming from the development of a piece of land to a property and that capital appreciation, those are not particularly suited for REITs. So crowdfunding basically, in a way, solves that. It gives you the best of both worlds. It gives the ability for an investor to invest a small amount of money directly, and allows the investor to pick and choose the products that they want. So coming back a little bit to investment-based, equity-based crowdfunding, the biggest news that is happening with regards to equity-based crowdfunding is in the US, and it is the JOBS Act. JOBS is the acronym for Jumpstart Our Business Startups. So this act was proposed by President Obama about 2 years ago, and it was basically passed into law last year. They are still working out the details with regards to crowdfunding, but basically solves a lot of the problems that retail investors faced when they were trying to invest directly in projects, in companies, and so on. And some of that allows that a lot of that regulation is around general solicitation. I'll have another slide on that. But there's an interesting fact that you might note, right? So if Americans shifted 1% of their invested capital into startups, that would be more than 10 times what the venture capital industry does. And if you think of the economic impact that provides, in this case America, that if you imagine a Silicon Valley that is 10 times charged, or if you imagine 10 Silicon Valleys across the US, that is the impact of what crowdfunding can bring to the economy. And as a result, there are countries around the world that are saying we need to take crowdfunding seriously. But as I will touch on a little bit later, that the governments that are saying these are perhaps not doing enough quickly enough. But there is some controversy, because a lot of this is basically making it easier for retail investors to put money into startups. And a lot of those rules were created to protect these retail investors in the first place. So there is a lot of controversy about whether or not it is a good thing to do. And just to touch on the regulatory environment in Asia, I think, like I say, the governments are saying that this is a good thing, we're embracing it, we're doing it. If you look at what the Singapore government is saying about crowdfunding as well, they see it as the future. But if you then dig into, say, where are the regulations, what is there, there's basically a lack of regulations around it. So regulation